Thanks for joining us on the News at 1. Let's take a look at your market news now. Asian shares dipped today as investors' move out of technology shares took its toll on some of the region's tech heavyweights. However, hopes of a major tax cut in the United States underpinned risk sentiment. Japan's Nikkei dropped with semiconductor equipment manufacturer stocks hit by weaknesses in US tech shares overnight. This undercut gains for banks and brokerages. The Nikkei ended 0.4% lower. Hong Kong stocks also fell as index heavyweight Tencent Holdings slumped to a one-month low. The Hang Seng Index was down 1.0%. In mainland China, a private survey showed that growth in China's services sector activity picked up to a three-month high in November. The Shanghai Composite Index ended 0.2% lower. On Wall Street yesterday, the Dow Jones Industrial Average reached a new record high, with banks and retailers surging and technology companies falling. Investors realigned their portfolios in hopes of benefiting from expected corporate tax cuts. The Dow rose by 0.2%. The S&P 500 lost 0.1%. Earlier in the session, it touched a record high. Now, the Nasdaq Composite Index dropped by 1.0%. For more on the markets, we cross over to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, the local all-share index is very much in the doldrums today. It was down by as much as 1.17%, with pretty much all sectors down, with the exception of financial counters. They were up slightly. The GDP number, which came out earlier, it showed that Q3 growth was at 2%. That was a slowdown on a revised 2.8% in the second quarter when we came out of recession. So that was below expectations, not a very good number, and that was on a quarter-on-quarter basis from one quarter to the next quarter. On a year-on-year basis, growth came out at 0.8%. This is pretty much in line with the annual expectation from National Treasury and the likes of the IMF for growth for the year. But obviously, we have to wait and see what happens in the fourth quarter. A lot of the pickup that came through that number of 2% came from the agricultural sector, which grew by a whopping 42% on a quarter-on-quarter basis. But, of course, we know it came from a very low base, having experienced the drought last year. So we have to wait and see what will happen with the fourth quarter, and our analyst will tell us what he thinks is going to happen in terms of GDP growth for the fourth quarter. And we see that the local currency has been on the back foot relative to the US dollar, but slightly improved against the British pound. So different dynamics playing there. But generally speaking, the rand has been doing quite well. It was up about 3% relative to the US dollar at the close of last week. And that was a combination of dollar weakness and, of course, local factors, market players betting on a Cyril Ramaphosa win at the ANC elective conference in a couple of weeks' time. But, of course, we'll only know when it actually happens, if it's going to happen. Let's take a look at the indicators. Well, I'm joined by Ian Crookshanks. He's at the Centre of Risk Analysis at the South African Institute of Race Relations. He's Chief Economist there. Thanks for joining us, sir, as always.
Good to be with you. Thank you, as you say, as always.
Good stuff. Now, yesterday, markets were very excited at the prospect of this US tax bill being pushed through by the US Senate. But, of course, there are two houses that have to make a decision on this tax bill. There's the US Senate and the House of Representatives. They don't seem to be marrying each other, and this has created uncertainty yet again, which has seen some depreciation in the US dollar. Is this merely a hiccup? Do you think that they're still going to push this through, and what are the implications of them doing so?
I think it is a hiccup. I think the president has made up his mind it's going to happen. He can't ride roughshod over both houses, but I think that they will keep on at it, plugging away, maybe giving away a little bit of what they really wanted, but I do think it's going to come about. I'm just a bit concerned as the cost to government, to their national treasury, and it's an affordability factor, and I think that is going to come to be part of the hesitancy in passing this bill right away. But there's no doubt that it will add considerably to consumer spending potential. And remember that in America, 70% of all economic activity or financial activity is due to consumer spending. So it is important. It could be quite a good boost.
Indeed. And then we see that the all-share index here at home down by over 1% earlier in the session, still pretty much in the red. Do you think this is just a factor of a stronger rand?
I think that's part of it, and obviously that's negative as far as the exporters are concerned. And the rand is, it's getting close to 13.50 now to the dollar. I think that is a factor, but against that we've got to look on the other side of it and say commodity prices are looking fairly robust. There's a bit of global demand picking up. Perhaps that will offset that. I don't think there's reason to believe that the JSE is heading for anything more than a minor hiccup rather than a major setback.
Okay. And then market players betting on a Cyril Ramaphosa win at the ANC elective conference. Now, we know that betting on such things can be a little bit tricky, and people can get it very wrong. If they get it wrong, what does it mean?
If they get it wrong and we find that Cyril Ramaphosa is not the preferred candidate, it would mean more of what we've had. It would mean more uncertainty about the financial management of the economy and of government's finances, particularly of the funding of state-owned enterprises, and of there being no apparent limit on living beyond our means. And this is something the government really should be paying attention to. You know, if you or I live beyond our means, we get a call from the bank manager, and we've got to pull in the reins. And that's what government needs to do. But I think the fear is that could carry on. And that's a big fear indeed. However, I would like to say that we at the Institute of Race Relations have done a lot of research into this, and we think that it's within a couple of percent for either of the two major candidates, and very difficult to call right now because one doesn't know what sort of pressure there's going to be. Pressure you could define as what sort of who's been bought and for how much. You know, I think that that is definitely having an impact that's very difficult to measure, and so it's going to be a lot of volatility in the markets without always obvious reasons for the movements that it makes.
And then the GDP number, as I touched on it, we've seen growth of 2% quarter on quarter for the third quarter, 0.8% year on year for the third quarter. Pretty pedestrian numbers, quite low, and obviously nothing near what we need to get, job numbers up and so on. What's your view about the number that you saw today, and what's your prognosis for the year?
Well, it's unfortunate. It's not very promising, quite frankly. 0.8. If we look at the year to date, we're at about that for the 9 months, at about 0.8, and that just says that population is increasing at a faster rate than the economy is growing. So I think that really it's disappointing. The real boost was in agriculture, and that was thanks to the breaking of the drought and the bringing of the maize harvest. That only happens 1 quarter a year. So I just feel that it looks like for the year as a whole, we are heading now to less than a 1% year-on-year growth rate. That spells job destruction, no real progress at all, and raises the risk quite prominently of a further ratings downgrade.
And of course, we are heading in towards the festive season, but at midnight tonight, we're going to see those whopping fuel increases, 71 cents a litre on petrol and about 60 cents a litre on diesel. quite substantial, and we usually experience price decreases in December. So what sort of ripple effect will that have?
This is going to have a very definite impact on the Christmas spending splurge that traditionally is what we have. And people are going to say, we were going to go away, we're going to motor to our holiday destination. Now it's going to cost so many hundreds of rands more. That means we can only go for so many fewer days. It's going to be less consumer spending, less activity in the pedestrian, in the malls, less spending, sort of off-the-cuff spending. And I think that it's going to be a slowdown on the overall economy, because it'll mean that people will be saying, you know, can we afford this? After all, it's going to go on. It will ripple through to the cost of everything. All the staples like bread and milk and whatever it is are going to be put up, because they'll say the cost of transporting them is higher. One never sees it when the transport costs come down, of course. But I think that that will mean less spending ability, less discretionary income. And I think it may be a more difficult ride for the normal Christmas season spending that we usually expect.
Oh, Ian, I'm so looking forward to the day where you're a bit more optimistic about the future.
I'd like that too.
All right, thank you for your thoughts on what's happening in the markets today. Well, that was Ian Crookshanks, Chief Economist at the South African Institute of Race Relations. After a short break, Nzinga has more business news for you.